Every time I reinstall my graphics drivers, it always loses the display on my encoder. I have to go through and play display roulette. What you guys learned from me today is I'm a little disorganized. I get a lot of Discord messages. You know. Good morning. What's up? All right, let's go. Market's open 9:30. Let's get front and center. Pull rocket scooter up. How you guys doing today? Feel free, do me a favor. Super quick. Can you get up there and like the stream? Subscribe to the channel if you guys haven't already. Go to rockscooter.com. Link in the description. This will get you guys hooked up with the free trial and free Discord. Check it out. Let's run the platform. Let's go about us. If you've never been to our Discord, go right here. Go here now. Go. All right. Let's see what we got. Spy out the door. Oh, by the way, I have a birthday coming up. Like in a couple of weeks. Any of you Coloradans? Do y'all have a name? Colorado people? Colorinos? I will be in your state for like 10 days. Am I muted still? Can you hear me? Let me get old. Okay. Yeah, every time I reinstall my graphics drivers, it's weird. Okay. My displays get all funky out of whack, and it also tries to make it resets all of my, I don't know if it's a Windows thing or a Mac thing, but it resets all of my what I have as my sound devices to something else. Okay, we are bare long down. S&P economic calendar. Pull up this bare long down. If you look right here, is a resistance area. Sellers are preferred in this range right here. You can see market makers are looking for sellers, either at hedge pressure monthly or the highest put wall in the zone, which does not apply today. Way up here. So we're looking for a 360. This is bear structure, not the best thing in the world. For SPY, let's do QQQs really quick. So it's like 360 is kind of like a possible short area. 267.5 on Qs, similar. If 65 is a resistance, it could just gap and go and sell off. Looks like we have positive resilience though. This is good news on the day. So looking like hedge pressure break is going to be predicted by a resilience nod. You guys see that right here? Resilience being positive. We are below hedge pressure. This is looking like, remember, resilience takes priority over hedge pressure. This is telling me that we are going to break and move high today. It looks looking good. I like the sound of that. Okay. Post up on the socials real quick. You'll post here really quick. What is my... All right. Me. Okay. Huh. Interesting. All right. One second. I'm gonna try to log in to something real quick. So waiting for QQQs to break through 265. I'm gonna take a long. So you guys are watching on the phone for a second. I'm trying to get organized here. I got so much stuff I gotta do. Oh, there it is. One more thing. Are y'all today Tell me what y'all are looking at today, and I'll put it up on the charts. There we go. All right. Twitter. Let me try this really quick. I'm getting used to like all the places I'm streaming. I'm gonna be like multi-streaming different places. I'm trying to get set up every morning. Did it post that I went live on the scooter bot? Woo! It did. All right, cool. Okay. Excellent. All right, it's a new bot. It's gonna post the links instead of the Zoom links. We're not on Zoom anymore. Okay. Cool. Yeah, let's see if this works. All right, perfect. Okay. Ooh, is that a 52-week low on SPY? It certainly is, or we're getting close to it. Around the edge. Okay, let's give you XY today. Let's see if the market's rational. Talk about doomsday. You know, the norm. Well below the 200-week and bear structure. Yeah. VIX is still pushing higher. We do have CPI tomorrow. I think that's going to be a big news event, actually, as a matter of fact. Much bigger than I thought it would be, just because the market is poised for volatility. And that's just kind of blowing my mind, because, like, you know, all my thesis is based around the jobs market and how the Fed's going to respond to that. I think inflation right now is going to be or CPI is going to come down really nicely, because we've had a production wave, and so surplus of goods is going to bring prices down. So anyways, big week ahead. Earnings coming up. I think Friday we got we start some banks on Friday. Let's keep a look at the banking sector today. BLU is a bullish signal off of 13 UVXY, so VIX is even expanding on its own, but VIX does have a resistance at 1350. This could bottom out the S&P for the day. So with resilience is positive, or like right on the edge, especially with NASDAQ, this is a day I'm not going to short. DD.25, thank you for reporting that. DD is going to talk about the desire for the index to ride the lower band, which it already did in the pre-market. So that is no longer a pivot today for us. So let's look forward here. Let me pull this off real quick. Making no decisions yet. We marked some of our red lines here. Let me go back and make sure that some of them are still active. Remember, on the right up, we did some of them. On the side, that's gone, that's gone, that's gone. So we delete the yellow lines when those are gone. When you tap them down here, we get them. So we track these things called red lines and yellow lines. These are breakout targets, resistance points, things like that. It's a really cool technique we will teach you. It's actually one right over here. And just to get ahead of the curve on that, let's go ahead and actually we save those. And we're going to put this guy right over here just to see where that downward area would be in case it keeps going lower. This is going to predict very accurately where a breakout target would be on the downside if we keep falling down. And so let me put this little yellow guy right over here, and there's the low. Off of the run. If it keeps going, which it looks like it wants to. Like boom, 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 boom. Maybe for tomorrow we get that resistance and pivot. There's definitely going to be resistance at this one for sure, especially if it comes off a CPI news print, or CPI print. Okay, these are downward targets and downward target there. Okay, so we're looking at S&P. My low probably for the week, if we do have to tap a low, is going to be right down here at 52. Yeah, 35.52. That sounds like a good number. All right, let's run some tickers. We'll rock scooter front and center. Let's see if we get anything that matches the index. Remember, resiliences are kind of hanging in there. They're trying to. We're going to see if that's going to work. Yeah. So we have new scanner settings, right? We talked about this yesterday. And actually, why don't I spend today going over the patch notes? That would be a great way to do some talking about the platform. Okay. SPY does look good at 358 on a long. On a break here, if res is greater than 0, remember resilience pivots to fill the gap. So any S&P, here's what I'm going to say, right? S&P has this ability, resilience has this ability. Let me take a screenshot here. I like to do this. All right, we'll draw it on the screenshot too. Okay, so if you see that you have this kind of area. Well, actually, let me redo this. Let me zoom out. Okay, so let's capture the open and close. And this is one of those ones where resilience is likely to forecast a breakup today, a breakout today. I wouldn't be trading for any run if I got it, but if this is one of those scenarios that we like to take a look at. Okay, so half gap's a halfway point between open and close, which is likely like right there, right? So that close puts us right about here. And so if resilience is greater than 0 while we're down here, which means that is usually support when res is greater than 0. This is support, and we'll likely have to break monthly hedge pressure to fill the gap. So these are one of those fun days. We have a video on it in our Discord already that if res is greater than 0, it forecasts a gamma squeeze. This is something we've seen many times before, and I only trade to fill the gap. So the minute this starts pushing right up here, res was positive. So keep that in mind. The S&P, the SPY valuation day above 358 is a 361 move in my opinion. So, hey, what's up, Kobe? Yes, ma'am. We actually started back kind of like late last week, kind of getting used to the new format and new streams. Good to see you. By the way, good to see you here. I drove by that restaurant that we went to. I went to Dripping Springs, maybe like in August, and I was driving. All out in that area. San Antonio, we went everywhere. So. Have a good time. All right, let me go ahead and put this hide user in this channel. All right, cool. Okay, so remember, keeping an eye on resilience today. That's going to be the mover, and Nasdaq resilience and S&P resilience are both kind of playing for that slightly negative. So we're going to watch them today. So with the S&P being BRSD, let's go ahead and go liquidity map and pop up some SDs and look for some breakouts. So SDs. Actually, let's do this. Yeah, SD. I'm gonna try something new with the new scanner. Instead of LMC, let's do LMO. We opened in the D. I'm gonna do all the S and Ds like that. And then what I'm gonna do is I'm gonna add a new scanner strategy called greater than. SD means we would be below monthly. So we are opening below monthly and now we're above monthly. So let's look for breaks. So all of these stocks, let's see if this works. All of these stocks, if I did it right, should have opened below monthly hedge pressure and have broken to the bull side, bull structure. So this is the new scanner. Aha, there you go. Love it. Okay, looking for right now, monthly hedge pressure breaks, DVN, KMI, FDX, Target, AZO, Ulta, and it sucks with UVXY on this list, right? That just makes the whole day suck. Like hold on, wait, let me make sure I did this right. Okay, LMO. Let me make sure there's not a glitch here. Why is it still picking up the LMC? Maybe that's a glitch because that shouldn't have been on there. LMC. Okay, so let's double check this. I did LMO and greater than monthly now. So the inputs are short down, short down, short down, which means we were below monthly, and then now we're above monthly. UVXY shouldn't be on this list. Let me see these as well. Did I program this wrong? Short down. Yeah. Let me try this. Oh yeah, looks like there's a little bit of a glitch with half gap. Okay, do I have data for that ticker? Let me try one more time. I just refreshed. Okay, short down, short down, and short down. So all the ones that are below blue and below yellow, right? So pick those three. I'm just double checking. Yeah, these are the ones there. And then now we're going to add to the strategy. Okay, cool. So let's get rid of these. Let's do the ones that open that way. And then the ones that hedge pressure breaks now. Perfect. A little. Let me check something really quick. It's interesting that some of them came up blank. Okay, now let's see if I did this right. I haven't used the new scanner yet, so let's see. Okay, so now this is correct. Some that open below monthly and they're now breaking through monthly. So if I'm looking for squeezes, these would be the ones. Target, BBN, STZ. Ah, there we go. I must have had something still set on it. Looks like AZO, we don't have data for that guy today. FDX. So if you do this kind of special sort with the new scanner, what's really sweet about that is that you can choose the runs you want, like which look good, like Ulta looks good today on a MH3 break. And this is the game changer part of the scanner that I'm super excited about. Like that, all right? So on the breakout side, again, not advice to buy or sell or anything. This is just how I do this. Ooh, hide user on this channel. Check it out. Target KMI. Nice. Okay, I like it. Right, you got the new scanner settings are pretty dope. I'm pretty happy with them. Action, we are BLD to open on spike. Yep. So just watching. Looks like resilience is getting slightly worse. This is some decent plays, I think, as long as the market stays stable. But I don't see any evidence of the market wanting to do anything but respond to increasing volatility going into CPI. It's going to be likely another day like last time. Is that the VIX is somewhat contained inside of here. So once we hit about 13.5 and pull back to 13, I think the S&P is going to bounce some more. But it is consolidating with lower lows, so I'm afraid that it's going to find lower lows before highs, especially today since we're pushing lower lows. So keep your eyes out for a 1350 break on VIX because it just accelerates from there. We didn't break through monthly hedge, we just are opening above it, which means volatility is going to be sustained at the open. Yeah, so I'm pretty much yeah. Yeah, so somebody pointed out that when you do the free trial, by the way, go to rocketscooter.com and check out the free trial of our algorithmic platform. You guys will not be disappointed in how cool the website looks. The platform debatable, but the website looks cool as shit. Go here, check it out. Free trial. You can actually tune in, no credit card, play around with it. Same thing that we have on screen here. You can play around on your own. Let's take a look at what's going on today. UVXY, again, still, I need this guy to come down. Feel free to scroll down a little bit, click on that stream like button. There's a thumbs up. Let me know how much you listen to me. It's not really how much you like me, it's just how much you listen. Simplest feel-good thing you can do all day long. Okay. All right, let's keep a look at this. Like I said, I want to see VIX and decay. Obviously, there's a resistance wall. I don't think the market's going to move really fast going into CPI tomorrow. I think we're going to sit still and just trade range slightly lower lows, slightly lower highs, etc. So VXY has a resistance there. I like to draw this in like this snippet tool right here. And I think that VIX, if we're going into CPI, is going to try to average slightly higher. But this is a possible range. Resistance, VIX is sandwiched, support. So this guy right here is bad. Well, 3 hashes means a break, 13.5 breaks. Pretty bad for VIX. I would be a little cautious on the break right there. So just keep your eyes out for that. Today, volatility is here to stay. I'm not going to fight it so hard. Swinging ranges to the mean area, right? All right, actually, like scalping. I say swinging. I need to really wake up. Jumping ranges to the middle of the weekly range. Cool. That works. I need to start posting more. I realize I don't post enough. I'm gonna start talking in Discord more because I don't talk in Discord like at all. You turn on the background music a little. Oh yeah, no, I can't hear what you guys hear, so I gotta let me know. How's that? I have that guy all the way down. You know, every time I reinstall my graphics drivers, it resets all the sound stuff. Karan, thank you for letting me know. If it is too loud for anybody, you have to tell me. Matt, turn it down. No, well, promise. Nothing yet. So I still am waiting for rest to pop above 0 and sustain above 0. So that's all I care about today. Yeah, other than the few plays that I found, I don't really see anything that I like. Let's look for any of the bear setups that were... Actually, let's look for any of the downs again. Let's go to LMO right here. So LMO is where we open. So the liquidity map where you open. So I like to find, again, if we're looking at stocks that are... we're looking for things to short, right? I'm gonna look for anything that opened on the... Let's think about the best way to do this. On the long upside, let's look for things that broke to the downside. So long and up and long and up. So we're gonna find those and then we're gonna add strategy less than MHP now. Okay, so the neat thing about this is we're about to put a strategy just called monthly hedge pressure break. You know, I have to actually really program it that way. But until we get it, I'm going to be able to kind of like hack my way into that solution. So these are finding stocks or ETFs really awesome that we're opening on somewhat of a bullish projection and have broken to the bear side, or I'm sorry, broken to the bear structure side of monthly hedge. So this is a gamma squeeze the other way. MNST, RCL, American, and Delta. The downside moves, these are guys that have started on the bull side that are looking on the bad side. Everything else kind of held the fort, right? So a handful of downside stocks picking on downside. So XLF, not my favorite thing to hear because that's the big earnings we have on Friday. Looks like Wall Street's trading a little bit into some major banking earnings, maybe ahead of time. Keep an eye out for that. All right. Let's see what the airlines are doing. XLF pushing lower. So any downside on this guy. Let's put the walls back up here again. I'm not doing anything just yet. Single date, monthly, 30-30. Let's put in XLF here. Support at 34. We talked about that monthly map. I think it was yesterday we actually did that. Let me pull that up. The XLF on the screen. Kind of reinvestigate this for Friday. Okay. This is going to be a big, this is one of the moving forces of the S&P. So let's look at just the 14th, which is Friday. Oh, okay. So single date 14th. Oh, there it is. Why does it say 13th? Am I doing something wrong? 21. It is not picking that date. The date, let's do the 12th. This is for XLF. Oh. I wonder if that's a... You can't hear me? Check, check. No, can you hear me? Some weird numbers, yeah. I hope so. I wonder if this is just a bug. An 11, 12, 8 manual single date. TQQ looking out. Let's take a look at it in just a moment here. TQQQ. Let's get that resistance the same. It's just in that boat that it's below 19 and pushing lower. Actually interesting to see that. Liquidity map 1021. Auto. Single date. Manual 21. Looks like there is a bug on the day box. Is that just me or is that others? Report that really quick. Can y'all test that really quick? Seems your bot's not updated. We posted up earlier. It's a 0.2 something. I'll take a look at it. Can somebody confirm the date box in the walls? Is it bugged for anyone else or just me? Yeah, TQQ is just pushing lower. And you come over here, you want to find like lower, like how far do I think that it can go? To auto date, daily mode. Okay, there's your TQQs here. Let's do manual date. Is it updating the wall? It is updating the walls, but it's just showing like the 19th, 20th, 21. Whatever date I select. Is this with anyone else or just me? Can somebody test that out for me too? We'll check that. Report on in for me if you can. I'm going to walls and I'm putting in manual. Okay. Okay, cool. So yeah, we're still just looking lower, and actually I'll just pull up the classic app just to see if the numbers, let me just see what's going on here. If I pick the 14th. Okay, so that would be 25, 24, and let's do TQQ here. I think it's just displaying the wrong date. It looks like 19 and a half, 19. Okay. So if I pick this and I pick the 14th, 25, 24, 24. Yeah, it's just displaying the wrong date. Unless if I pick the 13th. Shouldn't be returning anything. So what is it defaulting to? Rounding up. Oh, okay, that's what it's doing. Rounding up. Okay, cool. So let's go to TQQQ. Let's pick. It's just showing the wrong date in the box after you pick it. Okay. Let me send him a screenshot of this. Just a graphical error. That's not too big of a deal. It's just a hair. All right. No trades yet today, guys. The downside targets on this, I look for, if we pick for just the monthly target, that's what I do. We'll go to single date. Oh, wait, hold on. That was if I have daily clicked. Monthly, okay. Okay, so single date, 21st. And we'll find any support target on the call side that we see 30. Nope, there's nothing. It's all bear resistance all the way down. So on TQQQ, there is no easily seen support. Okay, I'm gonna take like a quickie little break and I will be back. I'm gonna missing put wall mean, how to interpret that, please. 356. So on, are you talking about QQQs or what? I'll walk you through. So essentially how to interpret this is that you have bull side. There's a video on our YouTube. There's a bunch of training videos. I encourage you to go watch those first. And play at the platform, and I'll help you like while we're live. So on SPY, okay. So you said 356. Okay, so let's put SPY in here. Not missing wall, but what you're looking for is, let's just say like on daily mode. You're saying right here, auto. Like how to interpret. Maybe I was doing single date. Give me a specific example. So a missing wall or missing zone, it just means there's nothing there that our algorithm picked up. So what we really care about is the breaks between call zones and put zones, like the distance or the breakout, where the breakout areas are. Specifically on the daily chart for SPY, this is all bear resistance, right? So if we get a break, you know, my maximum understanding of the high point is that we don't break from bear to bull side usually in a single day without a catalyst, right? So the gaps or areas where bulls and bears aren't is like where market's either liquid or illiquid. So the market on this side is illiquid to the bear side. There's more bears than bulls. So obviously the market would be lowering price with the intent to find buyers. And then the call side, on the bull zone, the market is more bullish than bearish. So in this area, you'll be raising price to find sellers, right? Generically speaking, that's how you interpret the zones. And zones are just blocks of walls. So if there's not, it doesn't matter like how many options are there. Our risk model looks at something different. But what it does, it isolates where that distribution of risk is, where you can see buyers and sellers are fighting each other and trying to find the price to agree at. Makes sense. You're gonna give me a ticker, I can walk you through as an example really quick. You look at lows. Okay. Give a little tutorial of the platform. It's good to see all y'all this morning. All right. I gotta send this out. Welcome to the stream, you guys. Okay. I'm getting used to sharing my social media stuff. I'm not a social media kind of guy. All right. And on Twitter, I did. Okay. Still sitting here, lows. Let's see, mean reverting, long up. Mean reversion just kind of means you're sandwiched between put and call walls. Where are they? Double check this. What is lows today? That's interesting to see. That is a condition that I think we also have nothing for. Just double check on this one. That actually called it. That's the one we tried to solve. We would call that mean reversion. Oh yeah, that's it. That is one of the newer ones. So there's a condition, right, where you don't have, we voted on this one, you guys remember that? You don't have call walls up here. So when you're above put walls with no call walls, we just call it mean reversion, as in it's neither bullish nor bearish. Oh yeah, so that's it. So right now it's fighting in that bear short up kind of setup where the market's looking to pull up the playbook really quick in a shade. This is one of those ones that has it's sandwiched between the two hedge pressures, right? So inside of here, you know, lows has an affinity to bounce very violently between these two. Bear short ups don't necessarily like to break out, but we did kind of you know, kind of gap into this no man's land, and it just immediately sucking back down where everything else is pulling back. Today for stocks that are moving, right, I'm going to be looking for the VIX to hit that decay spot, and then I'll probably be looking for entry points. So if I'm a better on the reversal or the run up on the market post CPI tomorrow, I'm looking to scoop any stocks that are above monthly hedge pressure with really tight stops. You know, that's how I like to trade them. It opened BLU. So you can just see like the affinity of what it wants to do inside of here. So when it starts bouncing between the hedge pressures, I make my decision there. If we lose monthly, obviously it's really bad. If I want to buy the dip, I usually wait for monthly to tap. So either side, it's actionable in the very near term area. Super actionable. Yeah, there's nothing really super crazy to talk about today. Some people. If refreshing. At least I can reproduce that. My time off? No. Okay. He says he can't reproduce the error. I'll figure that out. Okay. All right, let's talk about the new features, which I love to do. We had patch notes come out yesterday. We made a video of things to come. We're going to talk about the patch notes of what we just released. This is actually super cool, so we'll go through them one at a time. I really like to, you know, these patch notes. So we had 2.10 release. Yes! Right? It's time for some patch notes. Gorgeous. Look at that name. They put our little scooter man. He needs a name, by the way. Well, Mr. Fix It over here. Fixing up our platform, making it cooler, making it work better. Love it. Okay, so number one, graphical change, UI changes. This is a big kind of like graphical update. As you know, let's put the platform nice and full screen. We used to not have, you know, all of this on the side, and there was a huge rush as we were building the platform to take everything from Rocket Scooter Lite, y'all remember, called the Classic app, and make sure it all gets into Rocket Scooter proper. That was our big push. And after that, we just came through and we're cleaning it up. So differences in graphical display between Firefox and Chrome are fixed via display. This is an issue people are having where certain things would look different on Chrome and Firefox. Like radio buttons would be blue here and gray there. You know, just to have some uniformity between, like, you know, everybody's look and feel. The settings widget has been updated to allow for more friendly color customization. And this settings widget's here for now to stay. We're going to actually allow you to change the settings in different places besides just here. But this was originally designed just to control the artifacts on the screen, the bull zones, bear zones, text. We added a few more, like the text color, the weight of the line around the box, transparency of the box. And these things will actually like show you which color you've picked. It's not a color wheel, but you type in your favorite hex or you just keep the defaults. And then this guy controls these, and this guy also controls these for now. So that was the change to put those back and to give you just kind of a display to show you where those colors are that you have selected. You can also type some of the common names like orange, blue, aqua, you know, green, whatever. Liquidity map has been updated in order to prepare for UI changes and more user options. The liquidity map widget is right here. This is the area where you select the controls for here: daily mode, single mode. We've arranged it in a way where now whatever you select over to the left is quickly read on the right. You know, which date, daily, and auto. Okay, check, perfect. You don't have to go back and like reanalyze all these selections you've made. It just displays it right there. And in the walls functions, it does the same thing. So whatever you're picking, whatever mode you're picking, you want to pick single dates, and you have the monthly selected. You want to do like a manual depth, and you put in like something like that. It tells you have this monthly with a manual depth. Easy to read, easy to see, and I really like that feature a lot because I can just quickly glance and see what I picked. Maybe a wish list item is to take selections I picked and like print them on the top. Some kind of display there. Future thought. Next one, the bull bear text color added to the walls table. Oh yeah, just covered that one. Resilience header font changed to gray. That's just because it used to be like this weird white color. So you have platform cohesiveness. I like this, really nice. They've changed the heading on some of the scanner settings to show if it's percent or fixed distance. And that's easy to see with the percent sign here. We're going to have like units. Some of them we might have dollar distance or percent distance, which is good. Now I added a calendar theme to match the dark mode. Whenever you select your date in the manual date selection, it's a dark mode calendar. So it's a calendar drop down instead of typing in the numbers. So that's actually better. Super gorgeous. I love it. Coming down to the actual updates to the platform itself is that we had a few settings in liquidity map that we changed. There was a U condition that was fixed that wasn't being picked up. We had a correct and incorrect mean reversion reading when the put wall and call wall were flipped backwards, and what we call illiquidity pockets. Bear zone and bull zone inside of here is liquidity pocket, but the other way around, the other orientation is illiquid. The market is not wanting to stay in the middle. It's wanting to get out of the middle as fast as possible. We used to call it MR just because the programmer had originally not considered that case and was overlooked, and we just recently changed it. So when they're flipped around, it'll either say bear or bull based on the condition. We made a video of that. Another condition was the no match bug. Like if you had only put walls and you're above all the put walls, what do? There's no match for anything of our conditions. So these are the two we saw this morning. I think Lowe's is one of the examples. We just call it mean reversion. You're in no man's land. So you expect the market to do neither breakout or be bearish. Resolving issues causing liquidity map to crash. Yes, that was a big deal, and I'm really glad we did that. Really big patch notes. This is super cool. We listen to our cadets' comments, concerns here at Rocket Scooter, so which means we're working around the space-time continuum to provide you with updates. Man, this is so cute. I love it. Fulfill your requests fast they come. So, by the way, we also have software wish lists. Anything you want to see in the platform as we develop, you know, we have years and years and years of stuff we're putting in here. Tons of new scanner settings are coming through the pipeline. We just made a video over that. I'll link it in just a little bit. We have a lot of new widgets coming out. Statistical backtester, portfolio manager, trade planner with probabilities, like all kinds of neat stuff that's coming through the pipeline. Plus your standard widgets and features that you have in your trading platform, like news and watch lists and DOM and all that stuff as well. So as we're building a platform, anything you want to see that we don't have, you want to put in there. The trading platform built by traders, for traders. We're a team of engineers, and we like to make things cool. We like to make things groundbreaking. We're always going to be innovating, making something new. So if you like something, go to the Discord, go to the software wish list, make me a little mock-up, Microsoft Paint, whatever. I don't care. Let us know what you want. Hey, it'd be cool if the trading platform did this, because I've always wanted to see this in a trading platform. I'll build it for you. That's the best part. So yeah, so looking forward to the next patch that comes out. We're going to try to get something out every Friday. When we do release, and this month we want to release something every Friday. So that's kind of a new thing. So we're going to put out scanner settings for the most part, and the new strategies. The first UVXY rejection, we're seeing it right here. This is the first thing I brought up this morning. That's exactly what we wanted to see, that pull wall rejection. Kyle the man reminding us of that. We really need to see UVXY something else. Right, we need to see this guy down here, and that's the first thing I drew for the VIX. Okay. We need to really watch this VIX today. All right, your first time here, make sure you go to rocketscooter.com. Check this out if you've never been here before. Get the free trial of the platform. We have a humongous Discord community. It's free. One of the most active Discord communities there is as far as trading goes, and we trade a little bit of everything here. So you have a pretty, and it's free. So some of the rooms are free, at least. Chat rooms are free. Which comes first, the change in SPY or UVXY? So whenever you're looking for pivots, I line them up side by side. Usually VIX does not want to be the thing that breaks out. When VIX breaks out, the market becomes very loose and all hell breaks loose. So when you see like the S&P is falling to a support or VIX is running to a resistance and they're both moving at the same time, I would likely use VIX itself as the one that matters. Like if they're both in the same distance, whichever one hits first is the pivot. But if they're hitting at the same time, I want to see that VIX be my gauge above the S&P, because VIX and volatility is where I vote rational, irrational market. So if VIX starts breaking out of 1350, it's just going to run to 14 and there's no stopping it. And a call zone in VIX is one of our stop rules. By the way, if you guys haven't seen the stop rules video, what's wrong with you? Watch it. Irrational market, rational market video. I'm going to tell you, I want everybody to watch this video. If you don't watch this video, you're gonna miss out on so much Rocket Scooter stuff. It's very short too. We're starting to put out a bunch of short videos. Make sure you watch it. I just linked it. It's gonna talk the 5 things that make irrational markets happen, and I sit out and I don't play them. So that's a big deal. He asked what's better, SPY or UVXY. I thought you said UVXY is better than using VIX. That is correct, yeah. Any of the ETFs that settle in shares are better than any of the options based around indices or numbers that in those options only settle in cash, yeah. So you asked between SPY and UVXY. The VIX takes a little bit of priority over not my entry point, but what my method is. So I expect if SPY is falling and VIX is hitting a resistance, I'm not going to short the SPY as it's falling. I'm gonna say that the SPY is gonna halt when resistance is hit on that VIX. Volatility goes away. So that's what you just saw, right? So volatility is gone for just a little bit. We'll have to see if it comes back. And this is how you read it, right? So volatility is the amount of wiggle. Ooh, that's a really fat line. Let's start over. Okay, like the amount of wiggle when say that the price is flat, right? That's disappearing as I write it. What did I pick? Pen highlighter. That's so cool. I draw and then it. How are you doing that, Epic Pen? You're so silly. Is this just deleting my lines? Did I click a random button to make the... Does anybody use Epic Pen? Whatever I did, I like that. That's kind of cool. Keeps your screen from being messy. Yeah, everybody's Epic Pen. It's disappearing on its own. I'm very fascinated by this. Is there like an invisible ink setting or something? Heck if I know. Well, anyways. So what volatility is the amount of wiggle when price is supposed to be flat. So as you see, I drew a situation where price got wider and wider and wider, and then thinner and thinner and thinner. Volatility went up, volatility went down. And volatility can be experienced in 1,000 different ways. Markets can go up, down, flat, sideways, go nowhere, chop around, whatever. And so in this mode, volatility, as you see, as the VIX was going up, volatility went way bigger, and now it's starting to consolidate as that VIX is pivoting. So obviously, the like brute force drop with no base feeling goes away when volatility is drying up because people are not trading it that way. So VIX starts to break out, you can expect volatility to return, and likely it's going to return into that downside kind of move. And as volatility is breaking out, it's not manifesting itself like I'm drawing it, but I'm just kind of explaining volatility if price was the same. So at some point, one of these areas is like, I don't know how I did this. I must have clicked something accidentally. But we are experiencing a very cool effect where I can draw and it disappears. Have you ever used Epic Pen before? Super dope. I want that feature sometimes, I just don't want it now. Whiteboard, blackboard. That's not good. Let's try this one. Super cool. I like accidental discoveries. Okay. So right now, as VIX has moved up and is starting to reject, you can see that volatility tightening. Whether that means up or down, typically more volatile markets, when put to call ratio of the SPX is greater than 1, you're going to see the market pull down. And that high volatility has to do with more people sporadically buying puts to hedge, just kind of like riding the instance. So I am looking for that volatility to dry up. And if that volatility dries up and then we hit hedge pressure with volume and volume decays on that side, then I'm looking for the breakout. As long as resilience is greater than 0, I'm going to jump in on long at any time. So right now, as resilience is trying to make its way higher, you can see right here. Anytime it's above 0, I'll jump in on the long to fill the gap, and that's a day trade today. I'm just waiting for that all day long. If I don't get it, I don't get it. But if I do, I do. I'll be excited to see it happen. Okay. Oh wait, I forgot which one did I pick? Desktop 4. How about that? Okay, I'll be right back. I'm back. So we're gonna start doing a new format of the stream, basically like the real format of the show. It's just kind of been like a practice stream for the last week or two, getting used to all the kind of like the things we're gonna be doing. So we're gonna have some really neat things going on. It's gonna look different, feel different, different segments. It's gonna be really nice coming next week. So love you guys tuning in for that. Man, let's find some good. Let's see if there's anything else that's looking hot today. Target break into BLU. Yeah, we're getting that nice little breakout on target. Let's go to the wall. Let's pull this guy up here. Resistance and target. Let's get like a 175. Let me change my. Be a little darker here. How's that? What color should I do? Maybe F. Gonna be a good one. Let's go with like black for now. Maybe a little bit better to see. Yeah, I'm gonna do black really quick. Actually, white will be better, I think. I'll pick a cool looking gray later. That's good for now. Or, I wonder if I did green. I want to see what green looks like. Bare text, red, super red. Let's see like a maroony color or green. There's some promise there. Maybe we can make them red and green at some point. Bull and bear text, but I need the walls to be darker. Okay. Okay, volatility starting to drive a little bit. Yeah, target's looking like it's nice little breakout over here. 175 to 185 is that monthly target resistance area. We have monthly liquidity between 175 and 85, and I think target probably has earnings coming up between now and then. Let's double check that, because if it does, obviously then that expected volatility is built in. Let's see if we have. Target is going to be on oh, the 16th. Okay, yeah. So I guess there's just allowing a lot of the stocks here are in that same mode. Bear mode. Things are looking really kind of, you know, short-term volatility. We're seeing there's expected upside move. Doesn't really break through 175. So I think that like going forward, you see a lot of the stocks are looking just like this. They're sandwiched into this kind of like bear territory, but with bull structure. So you got monthly hedging up, kind of bearish positions down. And if you look right here, it's good to see you guys here. Welcome to the stream, by the way. If it's your first time here, go to our Discord. If you have not, and also please do me a favor, go down and click that like button. If you like what you see, we'll teach you a lot about day trading, a lot about swing trading, things you never thought you'd know. And there's that 175 to 185. It's not really too far up, but you can, as you can see, since the last earnings that we've had. This is not correct. Let me do a daily chart. May of 2019. That's skipping some time. Let's do the last run here. That's more like it. I think it's just a glitch and graphically, but this is what you'll see right here. Is that 175 to 185 resistance? That's right inside of here. Not too far, which is just showing that at least for the monthly, target is still bearish from 175 or lower. So even inside of here, any upside move likely just runs to fill this gap pretty much, which isn't a bad sign. So if I'm going to see breakouts, like I'm looking for breakouts in here this month, I'm not betting that we go up to like any of the bull zones or higher, especially the earnings season coming up and some major news stuff coming out. We're gonna have to kind of assume that October is likely to not show breakout ranges through here. We're gonna need to see earnings at least for Target or something else to push back up higher. So just the general volatility between now and the end of the month is about 20 points up. It's not so bad, but I mean, it's still a long way away for these things to flip bullish. The market's still kind of sandwiched that bear side. Been with Rex for about 3 weeks now. Best thing that occurred for me is when not to take a long or short, letting yourself just get caught up in the integration of the stuff of the chart. Awesome, dude. Yeah, so like when not to do something is the hardest thing a trader can learn. And nobody has indicators that are like, don't do something. Everyone's indicators are like open interpretation that tell you, should I long, should I short? You're trying to read the indicator. Sometimes when you go in there and you think, man, I want to buy the dip today, you're going to start looking at that indicator like a bull instead of just looking at the indicator by itself. And so even your trading bias can be built into your own interpretation of something, or you'll want it to look a certain way. And you'll like zoom out and be like, okay, well, it's bearish on the 1 minute and the 3 minute, but if I go to the 15-minute chart, definitely it's bullish. So maybe I'll be a bull. So you'll look for things, right? So leaving indications open interpretation. Like the worst stuff is like all that Elliott waves and harmonics garbage that you see out there that tries to look for the shape of the price. Even if like price action you can't predict the future of price action because human beings are random. You certainly can't take it another layer of stupid and try to protect it with predict it with shapes and colors like you're 4 years old. Like silly stuff like that, and people always fail because when you leave shapes and colors open interpretation, you as a trader are likely to build your own bias into it. Well, maybe it looks bullish now, but like if I look at it, they sit on my head, it looks bearish. Maybe I'll do it that way. Our things are discrete. It's like if this number is greater than this number, I'm going to sit out every time. And there's goodness from that where there's no interpretation for bull or bear bias. The rule is get out, stay out, don't do anything. And it's like if it's this number or greater, that's the rule. If it's between these two numbers, okay. If it's outside, not okay. There's no, well, if I stand on my head, or if I zoom out, or if I think about next week, or if I read the wind, airspeed, velocity, none of that. I see people with those kind of techniques struggling all the time. And they just never want to admit you cannot predict the stock market because the whole sales pitch like that. You write the books and make the indicators are you can. So, you can't predict the stock market. Nobody can. Analogy's on point, right? Not to knock on it. I mean, everything has its merits, but I would argue that you don't need training wheels on a chart. This is a fun thing. Let me teach you guys some math. Okay, you ever know a little bit about to bore you, some of y'all, but so if I take a price and time, see, my things are deleting. I have to remember how to not have that happen. Let's just like draw it's a good analogy, right? Let me exit the program. Let me I have a really cool analogy too. Y'all are gonna like this. Let me see if I can't find the settings on this guy. Menu, settings. Okay, I'm gonna check. It's a really cool one. Y'all are gonna like this one. Yeah. Yeah, I draw. It disappears. Really, I think it might be like a cool setting that I did not know existed, but I'm just gonna like close it and reopen it and try it again. Let's try this again. See, whatever hidden feature I uncovered was super cool. All right. So, okay. Here's a neat thing, right? What's our reason to draw? Epic Pen. Epic Pen. It's really good. Okay. Let's do it quickly. Just pull like SPY. Let's put the SPY liquidity map up. Take a look at this. You guys are awesome. Yeah, market's looking pretty okay. Volatility's drying out. Res greater than 0. Time for some long action here. Let's bring in hedge pressure. Pretty nice. Res greater than 0. That was that move I was talking about this morning. Likely to fill the gap. Okay, so here's something neat, right? If I were to take a distance of this and this, okay, and price were to just do this inside of this distance, like up, and then price crashes, right? And I come in here and I create a little math equation called I don't know, like a moving average, right? You know, you hear things like MACDs are so filled with moving averages. And I take a moving average between here and here of like, you know, look back window 10 or something, right? And it's gonna like do this and that. And then I make it 20. And then I make it like 50 and 100 and 1,000 and 10,000 and on and on and on in infinity, right? And then I go from period 1, which is matching the chart, to period of 1/10, 1/2, or 1/10, 100th, 1,000,000th, 1,000,000,000th, 1 gazillionth, blah, 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 blah. And I take all of these sine waves that I've created. Now we're to add them up, the sum of all infinity, where x is equal to a function, some function like some silly shit like a MACD, moving averages, function, price and time. You know what happens? You take all equations of a different period, putting price and time into a function box and summing all the functions to infinity, and you put infinite moving averages on your chart of infinite periods to infinity to 0.0000, infinite zeros and 1. You know what you ultimately end up getting? You circle back around and land on price, you idiot. It's called a Fourier transform. And so, like, at the end of the day, the net sum of all or Fourier series, you add it up. Fourier transform, how you solve the series. So if you go to this point right here, look at this. The sum of all technical analysis, you just land back on price. You would take all your technicals and find every infinite magical combination of all technical indicators, of all delays, no delays, getting ahead of price, going after price, the sum of all TA. If you were to have every indicator and add it back up, just gonna recreate price as a sum of all indicators. Sounds silly to try to pull a couple of them out of that hat and think that they have some magic powers to them. Isn't that crazy, right? The sum of all moving averages of infinity and 0.0001. They're just gonna like do this. I mean, you're just gonna end up ultimately recreating price is some sum of some set of indicators. We'll just circulate back around. So why people use indicators to slow down their price and then add a few more in their decision factor? At the end of the day, you already got the best indicator in the world in front of your face. It's just called price. I mean, that's literally all that matters. Not to knock you on some TA, but this is what people call algorithms these days, and it really makes me sad. There's no smartness built into the idea that every 5 minutes on Facebook I get a pop-up for some trend line moving average magic beanstalk stock trading algorithm. Meta down 4.2%. It's crazy. Never thought it dropped this low, but it's been in above the call walls maybe one day past couple months. I guess I shouldn't be surprised. Meta's gonna be very sensitive to same things Nvidia and some of the chips are sensitive to right now. Chips are gonna be in a very big weird spot for a while. Anything that relies on chips. Does that make sense? A funny just like as a funny nod. You know, when you're trying to use past price and time to predict future price, you're saying that I can create an equation that can extrapolate off of some function, some future values in that function, and you call it a moving average or whatever, and then you take all of them and add them up. You're going to use price and time to predict price and time. So when you go back to like your functions, you're just recreating price as best as you can. If you had the best period moving average that just smoothed out price with no delay, it would literally be price. So the ultimate goal of technical analysis is to move you in a big old circle. To be honest, there's no predictive power in the stock market. You just can't do that. It makes no sense. So what we try to do is different is predict volume. We will show you where volume can be, and that's different. Volume has to do with where people are going to buy and sell stock. Very easy to find that out if you know what you're doing. So we'll just show you our levels predict volume spike. So anytime you tap a hedge pressure, there's a volume spike. That's tried and true. So the difference is that you don't know if it's going to go up or down because you can't predict the stock market, but you know activity will be there, and that's what Rocket Scooter does. Different than most. Res is above 0, which is nice, and we're starting to take a little bit of a pop on QQQ, a little bit of pop on SPY as well. I like where that's going. Yeah, I think you're right, Mark. Really do. Yeah, so things are looking okay. I think for now, again, as res stays above 0, I'm gonna look for the market to push up. 360 could be a target today on the S&P, which is looking nice and tidy. We're still kind of right there on the edge of that rational side of the market. Is my S&P chart. Volume profile is definitely something I subscribe to the idea of volume profile. Volume profile, let me tell you, if there's anything that does weigh merit to any kind of technical analysis, it's that you can guarantee that you're always going to have pivoting action against the open of the previous day. I'm sorry, the open of today and the close of previous day. Anytime you return, let me show you where volume will be. And I'll tell you what volume profile is good and not good at. So right here is the open. Anytime you come close to the open, you're going to see volume start to pick up. Anytime you come close to the open, you're going to see volume start to pick up. And hedge pressure was there. Anytime you come close to the close, you're going to see volume pick up as well. In between the open and close, inside of the gap of any particular day, if this is the half gap when we gap down, then the open is like somewhere there. It's going to be more accurate here. And about equal distance from the half. This is called the redistribution zone. So on these boundaries, you know, the market maker is just redistributing whatever imbalance they took between the 2 days. So if it's like a 600,000 share imbalance that they had to buy, then they're going to be raising price to look for sellers, and you know that they'll be at the top of the day because that was where the big sellers were at the end of the day. So open and close in that redistribution zone, there's always volume there. Hedge pressure always says volume. Volume profile is going to show you where yesterday's high volume areas or any period in the past high volume areas were going to be. So the good and bad about volume profile, let me give you an example. Say the price, I'm going to just arbitrarily like draw something, right? So the S&P was like rallying off of a news event, and then it moved, and then it moved, and then it consolidated and stayed there for like 6 hours, right? And then closed. And, you know, volume was like nice and tidy, then right? Volume came down, and then volume started to decay, and then started to pick up at the end of the day right there. And then the market closed and it's out. Okay, so in this little region right here, clearly there's a lot of volume. On the onset of this catalyst, there's a lot of volume. And then of course at the end of the day, there's a lot of volume. Maybe price does that, right? Sells off. Today, your volume profile, if you're on the side, is gonna look like this, right? Like that. A little catalyst right there, right? And then so today we're going to draw with a different color. let's say green, right? Then today, there's a bad news event, and then the market gaps down to here and literally starts trading to there. Okay. So classically, volume profile says, well, there was volume. Say the look back window was just 1 day. Okay. And so this is showing high activity there, high volume, and this is showing high volume here. Well, let's pretend that we didn't know the shape of the price. You know, higher volume, you might think bigger support, right? Let me tell you this. What if this high volume right here, everyone that bought had just taken profit at the end of the day and sold, and nobody's bought, or nobody's really net long at this level? Even though there's high volume here, the thing that lacks here, this doesn't tell you, tells you where past trading took place, which can be a support or resistance. Tells you trading, and it tells you trading activity from past, right? From the past, but not support or resistance, because it lacks the visibility of telling you this bull are they still in their position or not? You don't know. So what you lack in a volume profile is when you get there, there's no guarantee that there's still activity there. So while it is an easiest, I guess, way to get started trying to understand that volume is the best indicator you can ever have, past volume doesn't indicate future volume or future support or resistance any better than past price indicates future price. So if these bulls are still there, the person that bought $10 million worth of this stock, if the market goes down there, just because one person bought it doesn't mean that others will buy it or that they'll buy it again. So there's no guarantee of repeat action at previous support with high volume. 0.251 DD. Now, what it does do is show you where markets are, you know, somewhat liquid in periods of pockets. Liquid's not a bad idea. Definitely liquid, or buyers and sellers are certainly finding each other, but you don't know who won the fight. You know, at the end of the day that all the bulls sold off and people are actually starting to short for the day. You wouldn't know. The market moved really quick here, illiquidity, right? It was a one-sided buy. The market makers were shorting against only the buyers. So there's only buyers here, but there's buyers and sellers there. So a little bump could be very liquid where buyers and sellers are not making an imbalance in you know, price or position. But here, the higher volume, you may assume that it's more of a support when really it's more of a market is illiquid. It's very much one-sided there. So support for me are where markets are liquid or not. And the problem with volume profiles, they can't tell you because of the shape or amount of it. So imagine here, right, that the market just moved on 100,000 shares here, and it was the other way around. Like you had a liquid market here, just sat here all day with all this high volume, and then you had like a lesser bump for the catalyst. But the other way around, like the big ones on top. The size doesn't necessarily imply liquidity. So you have to be able to read the volume profile with what happened on the chart. If it's an event that moves price in one direction, it's usually illiquid. So it's not the shape or amount of volume that dictates the level of support or resistance, which a lot of people tend to be like, oh, there's the biggest volume, there's the biggest support. That could be the weakest support or the strongest support. You can never tell. The way I like to tell is if the market does congest and hold price for a certain area of time, inside of this market is liquid. So when markets are liquid, there is no imbalance. So I actually would scratch it off as support or resistance. It's neither. There's support or resistance would be if the market was illiquid at a level where the market needs to find liquidity by moving price. So if you're looking for resistance and support, you want to bet that the market's illiquid. So example that I like to say is that, you know, market's trading down, it consolidates, trading down, consolidates, trades down. And inside of here, you know, there's that volume, and you have consolidation, consolidation, consolidation. You have like volume profile looks like this, maybe even bigger, etc. So these areas are markets where when buyers or sellers were in equilibrium, we call them liquidity. And for markets to move and become illiquid, and say there's no catalyst, right? There's no reason for all of Wall Street to just jump in on the same trade at the same time. So when there's no catalyst and markets are even or kind of like balanced, the way they become imbalanced is that one side of the position gets out of their trade. So for example, like bulls and bears are both long and short, they're adding to the position. So instead of talking about volume, let's chart something different. Let's call it open interest, an example. The number of people that are opening positions. So an example is if I long the market or short the market, I'm opening a position. I've got bet on the table, and that's called an open position. So instead of me plotting volume at the bottom, let's plot open position. So say right here, it's a big, kind of like low volume day. And, a lot of people were like open positions. And then at some point, nobody was buying long or shorting. Everyone was just trading to each other. So there was no new like money coming into the positions. And all of a sudden, a bunch of longs started to get out of their longs. So the non-dealer open position starts to drop, right? People that are in trades get out of their trades. So as open positions drop and price falls, then that tells you the example, in this example, that price was in harmony. And then when longs got out of the way, there were less buyers. So dealers lower the price to find new buyers. And once they get here, down to here, then they're going to say, aha, buyers stepped in. They open enough positions back to the total open positions before. So now we have sellers here and buyers here. But now we have a big volume spike, right, for this day. Lots of buyers stepped in. And what happens if we had more open positions? So now you have a period of illiquidity where you're becoming more one-sided than the other side, less balance. And because the market is very illiquid, it becomes more volatile. And so the market can drop here just because of volatility with no change in position. Market fell again just because of volatility. So maybe here you saw a big VIX spike and market fell. So I'm explaining three different scenarios that can practically look exactly the same. So as the market's falling even further, it's squeezing people out of longs. And as it's falling, people are covering shorts to take profit. So as you see, more people are becoming interested in the market, which is more liquid. And then that all of a sudden dries up the volatility and stays there, right? So in this example, more people are actively engaged in the market. The market's very liquid. So volatility gets trapped very quickly and markets consolidate very rapidly. Then you'll see a bunch of open positions. The more open positions there are, which you can't track, in theory, that's where these are better supports, right? So the opposite is true, is that in this world right here, where between this one and this one, people are closing positions. So there's less participants here than here, but there was more volume. So you can have this example that while this had more trading, you might think it's the best support, but in this particular case, it actually was just more people getting out of their trades and less people participating in the market. And there's that higher volume, and you may think that's a better resistance, but because there's nobody here, the market can just waltz right through it like it's butter, right? And so resistance is you want to hit pockets where people, liquidity pockets, and we talk about those all the time, where there's a lot of traders in a position, still in a position when you get there. And the volume profile can never tell you that. Nothing can tell you that except for Rocket Scooter. So when you get to those levels, you take your volume profile, and when you get those high volume nodes, if they are here, I wonder if I can put volume profile in here. Let me see if we have it. Oh, okay. Let's check it out. I wonder if I can. I've actually never put this on here. Let's take a look at it. This says look back window. So let's go back 1 week. But it's not going to show liquidity maps. Okay. But let's just remember over the week. Let's just mark where some of these are, just to remember. Here we have four. This is a week's worth of volume. 440. 385, I guess. I'm going to show you what I mean. Is that which one is going to be support and resistance going to be very random when you return to it. 386. So while volume profile is really good, this is a little, okay, let me. The one thing it is lacking is what I'm about to show you, and you can make up for it with rock scooter. I'll show you. So what you're going to look for is which one of these guys right here, right? I'm just going to kind of draw it 289. And then we'll do like the low volume node, which is 357. Okay. And this is 480. Yeah. So let's get back to like the intraday chart. Change the number of bars to more than 24. I'm just generically just kind of like going through this quick. Gonna make it quick and dirty. Okay, so what you want to see is now, like when you put your charts together with the volume profile, again, this isn't gonna line up, but 357 is where we are here, the lowest volume, but today it is the highest volume of the day. So, you know, what you're gonna expect is inside of here, when you start to show where these liquidity pockets are, what is this, 365? Nothing here. 367, nothing here. Let's see if there's anything higher on the monthly scale. So let me go to walls. I'm going to show you where this counts and see if this works, or see if it shows us anything. So 390 to 420 is a liquidity pocket. So let's just say that 405 being the middle there. Let's actually go to manual and let's be a little more. Let's just zoom in a little bit more. So 400 to 415, so about 407 and a half is going to be the market's very liquid, right? Somewhere in between put and call zones. So as you see, 440 is at peak and 407 is as it's rounding off, and this is relative size of that particular volume profile. Now you can see that the market is liquid here. So 407 is a resistance because you had high volume and the market is still liquid there. So liquidity will tell you that you have, you still have bulls at 415 and bears at 400. So where this volume actually is, you can see that right there, that at 407, which is pretty much like right here, like right near the peak. So in this area, that high volume node is resistance, right? Which is great. So what you do is if you see on a monthly scale that you have your high volume nodes sandwiched in liquidity pockets, it's going to be glue when you get there. And that's the trick. So even on the way down, right? Let's see which ones of these there are. You had 289. Let's see if there's anything down here, right? 289 is nothing but put walls, okay? High volume right here, there is no support. There is no liquidity. So even though this is the highest volume on that volume profile, if we get to 289, like today, it's not going to happen, but pretend we got there today, there, even though this is the highest volume there, there is zero support. Do y'all see that? Because there are no bulls here. This is all bears down here, right? So here, it's a free fall, even though it's the highest volume. Here, it's a massive resistance, even though it's less volume. Do we see that? So the trick is if you can prove that market makers have calls above one of the peaks, like you look at the walls. So market maker call zone 415 and higher, and you come in here and you draw. This is giving me an idea for like a new volume profile. Did I just invent an indicator live? I tend to do that a lot. I feel like I just invented a new indicator. Let's call it the volume profile that works. Or enhanced volume profile. So the idea comes down to if you have liquidity on in that range. Let's just invent something while we're here. Why not? We love inventing things. Okay, so 415 is here, right? Wait, this is 440. So let's just kind of estimate, right? 415. And then this is 400. I would say that any time that you have high volume node plus, so high volume node plus liquidity pocket nearby, then equals support or resistance. So if you have liquidity there, it means that your participation is still really high because you still have active bulls and active bears. Your participation being former proof that people are going to be buyers and sellers there, market makers will retreat and hold that level because of liquidity. So as you can see right here, maybe we can mark it with like a gold color, right? That this is an actually good one. So let's like, the indicator could say that high volume node is resistance because of liquidity pockets there. Now the other side of the coin is like illiquid, right? Liquid, no call walls. This is like the second indicator I've invented on stream this week. I love it. We're coming up with all kinds of new ways to do stuff. You guys inspire things. I just get kind of like carried away when I start talking. I love it. So the idea is that this one, even though it's high volume node, it's illiquid, so no call walls, not resistance. So we could color support. If you compare that the market is liquid near a high volume node, resistance support. And that's, I manually do that. So if I'm falling right to 360, I'm gonna expect the volume to spike up. And so when that volume starts to decline in participation, or like not participation, but trading activity starts to bail out, then I'm gonna look at what side I'm on hedge pressure as that volume starts to decay. I naturally trade like this. So if I'm on the upside of hedge pressure after the volume starts to decay, then I assume that no more human traders are going to step in and the algorithms are going to take over, and above hedge pressure, there's just more longing than shorting algorithmically. So I'm betting on hitting an area and it sparking liquidity, which it will, because there's the maximum amount of gamma hedging takes place at hedge pressure. So robots kick on right there, and that's what you'll always see. When those robots kick on, it's liquidity. So when that liquidity dies down, which way is the participation going? Well, if you have more long orders than short orders due to hedging, like above hedge pressure, you're gonna have more long than shorts coming in. So the market will become less liquid immediately after the volume declines, and therefore there will be more buyers and sellers. So the market's gonna raise price for sellers. So I already do that already, but we can demonstrate that in a volume profile. I love it. This is this is volume profile. This is a volume profile with liquidity. So it'll tell you if the high volume node has merit or not, because you've got put and call walls facing each other nearby. That's basically the easiest way to say it. Do y'all like that? I mean, it makes sense if you know our tactics and techniques. New indicator, volume. So volume profile is good, but the thing is that you have the high volume nodes. You don't know if it's going to be support or resistance unless you know it's liquid. And the low volume node, just like today, 357 is the low volume node. You can see that the S&P is just hanging out there like it's got nothing better to do. So why is the low volume node a sticky spot? It's the same thing in reverse. It's, again, you don't know if it's going to be resistance or support. Low volume node doesn't imply that there's no support there at all. Because the support can come from like hedge pressure or anything else. So interesting to see how that works. And so you really need to do volume profiles, look at the high volume nodes and low volume nodes, and you have potential action points. If you pair those up with hedge pressure or liquidity pockets, then you know on top of liquidity map, it's like you can draw a map on top of a map. So if BRLD is an example, y'all are gonna love this. And by the way, if you've not checked out the free trial, the link is in the description. Go below and complete the platform. You can see for your very own eyes that you can do this. It's really cool. So BRLD has resistance from the highest put wall in the zone, very easily seen right here, all the way to the halfway point between here and hedge pressure. So 365, 358, 3.5, 361.5, which is here. Okay. So there's resistance from here to 61.5. Oops. Draw error to save my life. Then on BRLD, there is resistance from here to here. I'm sorry, there are sellers from here, buyers here, sellers here, buyers there. Sorry, my bad. Not resistance. And then here to some level, which again, we don't have. But you can understand that pivots where there'll be sellers here, and I can physically come write that, right? Sellers. From just algorithmic hedging. These are sellers here. Usually you'll see resistance there. Sellers from the liquidity pocket, right? Always resistance. So anytime you're between a bull and bear zone, liquidity pocket is resistance. So we look for sellers. Support on the other side, resistance from the bottom. So here, buyers, right? BUY. And then down here, there are no buyers. So this is all no buyers. Illiquid, right? So you would take your volume. So this is the map. Liquidity map is here. And then you could take your volume profile and say that you had a volume profile that kind of like looked like this, right? From like the last, I don't know, 2 months or whatever. Let's say 2 month volume profile. You know, clearly you have high volume there, high volume there. Let's put an H, low volume there, and low volume there. Okay. There's high volume, and there's liquidity, right? So if we were to make like an enhanced understanding, you have liquidity. So liquidity plus high volume node, we could actually come here and I'll mark red for resistance, right? So this guy, like we would just kind of like mark this as a resistance high volume because there's liquidity there. Down here, buyers and sellers exist for different reasons. Again, it's very liquid inside of those two hedge pressures. You have buyers and sellers in between here, very liquid as well. So because price is hitting this liquidity and there was high volume there, again, it would be a red. It would just be like this. Like we would color the bars, resistance. As you have low volume here and market is illiquid and you get buyers, this low volume node would be support. So what liquidity map can do is pinpoint areas of support and resistance at each one of those nodes. So high volume in both instances look like resistance coming from below, but anything inside of here with that low volume is likely support because you get that long hedging and it's illiquid, so it's likely going to move up. Does that make sense? If you keep scrolling more of the chart, I'll add more of the profile. Oh yeah. That's something I was noticing while I was scrolling. Well, thanks for telling me now. Jeez. I could have used that later. No, actually, there's a delay on the stream. So now I learn stuff every day, though, about TradingView, which is nice. Love it. Okay. So an adaptive volume profile will look for volume nodes. We'll call it adaptive volume profile. Look, we just invented it. No, liquid volume profile. Liquidity. Let's give it a name. Liquidity. Liquidity volume profile. Textbook, you guys. Okay, number 1, look for signs of liquidity, inversion between HP and MHP. Look for signs of illiquidity. Of high or low volume node. Done. Easy as that. So yeah, if you have liquidity, it's going to be resistance from the bottom. If you have illiquidity, it'll be support and a breakthrough range. Second indicator we invented, but yeah, that'll work. But it makes sense, right? And so this does match the idea that, you know, we expect liquidity pockets to be resistance as you touch them. This is liquid, high volume nodes. So essentially you'd want to sort high and low volume nodes to really match where buyers and sellers are still active in positions, which means between calls, which means there are bulls here, there are bears here, still in trades, not just high volume, but they are still in that trade and still in that trade because those calls are still there to hedge against it. So if there's calls at 415, and there's puts at 400, there is certainly somebody that's going to be a bull at 415 and somebody that's going to be a bear at 400 at equivalent risk to the trader, which liquidity pockets are looking for. So that whole trick right there is going to make volume profile very, very awesome. Not just trying to guess where support and resistance will be, but isolating ones that don't make any sense. So you said if I go in here and I add like, I just scroll to the left, visible range. And the more back that we go, the more that it will show. Yeah. We don't have all our historic data programmed into here. So let me go to a 15-minute chart though. Let's go back this way. Nice. Yeah, no problem. Appreciate having you here. So even like, let's just show more of the chart and just like understanding that you have high volume here and here. And the idea that we can draw the actual zones with that. Well, let's try to see like what happens at 392. So let's put SPY on there for the monthly scale. And 392, as you see, SPY has only put walls here and it's illiquid. So as we push through 392, as you see, there is no liquidity here. You're just gonna be squeezing bears the whole way up. So there's no resistance to at least 400, which is up here. And so between 400 and 407, you can see that right at 407 is kind of like this little pit right here. So the market's actually liquid right in the middle of that Jackson Hole day right here. It's the highest liquidity, right? And it's not just from that day, it's from the visible chart. This liquidity comes from likely, bulls buying here, right? And bears shorting here. So it's very liquid in the middle, as you see, because the liquidity pocket is there. So you have definitely people at 415 on the long side, which is right there above Jackson Hole. There's that bull range. You have people at 400 on the short side, which is literally like right here. So super liquid inside of here and a low volume node. So our adaptive one would flag this as resistance when you get there. And my eyes trade the same way. I look for like where that resistance support is and just make that analysis just like that. Anything else? 370 down in that area. There is illiquidity here. So this has actually 370. It's a little mixed up at 366 and some change. So right about here, this high volume node is going to be liquidity. As you see, you have liquidity pockets there and there. So in this particular range, 60, 66 and a half, 60 and a half, right here in here, liquidity pockets. So this is going to be support. So in our analysis, as I just did, this is resistance over this month period. This is support. And little did we know that, little did you know during here that these positions were likely anchored back here, somewhere in this range. And these positions were certainly anchored down here. And as you see, the market is moving away from support and away from resistance and kind of moving its way towards the middle. Pretty neat, right? So that's what an adaptive volume profile would probably be doing, right? It's showing you where the market is liquid on a monthly scale. So obviously you have low volume node, this high volume node right here at 395, there's nothing, right? So it's nothing. So illiquid. And illiquid areas is like, let's just show like here. Illiquid areas right here, the market just rapidly will change direction. Like it doesn't hold that long. It just quickly moved here. And then now it's finding that support area and now it's finding an illiquid area again. So like I said, any breakout from here moves rapidly to there. And that's kind of what we're looking for, right, on any breakout side of the day. But neat, right? Increase the resolution. Oh, I wasn't like trying to be too detailed about it, but yeah, I can go in there and change the resolution. I don't know if we have everything. Yeah. Yeah. So the idea is that you can find where the positions are still active. So when you get to that high volume node, are there people still there? And so here we are at 375, which is high volume over the course of wherever, right? A lot of that volume probably picked up right here as that volume is ramping up. And so I can go to the monthly mode on the S&P and see what does 375 look like. Well, inside of here, 375 is all bears, all bears, all bears, which means people are shorted to the dealers who were long, right? And dealers are long and bought those puts. So this is where dealers are long and traders are short right here. So the move to cause illiquidity would be, again, less participation, which means shorts would cover into the bear territory. And so even though there's high volume here, right, there is no liquidity. So this isn't considered resistance for this this analysis, right? So high volume with no liquidity is no resistance, right? So not resistance. I mean, it can be resistance for other reasons, but on this particular analysis, right? Not resist. Because illiquid, right? Why did I pick black or gray? Why don't I pick like a white will show up on all backgrounds? Yeah, let's do that. Okay. Illiquid, right? So I would say it can be resistance. It can be resistance for any reason, but illiquid, not resistance because of the volume. This right here is all bears against the market makers that are bulls. So it's all one-sided, it's all bears and no bulls. Right? So the market's illiquid. So if the dealers need buyers in illiquidity pockets, the funny thing is normally you would lower price to look for buyers and more participation. Or you can raise price to squeeze shorts to make them be the buyers so you can redistribute to them at the expense of liquidity. So if you squeeze people out, fewer participants, you have to rapidly go to where the market is liquid, which we already showed us here. So if the dealers choose to squeeze price higher to find the buyers, they're going to rapidly rush to the last place of liquidity, which again, we talked about is 407 for the month. So traditionally, you're going to lower price to increase activity to find buyers. We can see that they are down here in like the 370 level. And that's been proven right here because all down in 370, there were clearly buyers and buyers and buyers and buyers, right? Pretty neat, right? Just an example. Although this is not showing all the data. I don't know what this is missing because this is 376 is not the current price of SPY. But just an example of just kind of showing you how you would read it. I think we're missing some data because this is not where it should be drawing. Price is down here on the 15-minute candle. As you see, we're not updating today's activity. But the point I'm saying is that when you're looking at this, that's how you would read it. Great example is like on this visible area right here. There is high volume inside of this range and there's liquidity right there. So this is support. And that's why you were seeing that as support where my mouse is right here. Right, exactly where my mouse is, support, support, support. I'm trying to line up a liquidity pocket, right? Gap through it and rallied, right? Then here is where it was pivoting lower. Look, resistance, resistance, resistance. So now liquidity pocket becomes support, high volume is support. Here, it's all bearishness. There's no resistance yet. Like just example, right? So it'd be pretty cool if we actually made something like that. I just wrote it down in my little ideas book. I like that. Super cool. Now let's change the colors. They're not so garbo.
Download your meditation videos and unwind uninterrupted. Try our family plan.
I don't need to see down volume, up, down. I don't need to see any of that stuff. Let's just pick different colors. Value area up. I just want to see the volume bars, to be honest. I don't need to see no point of control. That's just the highest volume and volume profile. Again, highest volume can be support, sometimes cannot be support. Up volume. It's transparent. I don't really care about up volume, down volume. Oh, these are transparencies. That's why. Just make it look cool. Okay. Okay, Spy's moving pretty, it's pretty good today. It's actually really nice. Let me change that again. I don't like those colors either. Yeah, that's better. Put that monthly walls on there. Right next to volume profile, and let's show it. Let's go to for third. So it looks like it's skipping a week of data. Well, either case, right? The idea is that you'll be able to draw a volume profile and pair it up with your bull zone, bear zone, right? So, for instance, whatever you have going all the way up, let's do manual. And let's just make this one. And we'll generate walls across the board. See what we got. As an example. Okay, perfect, perfect, perfect. Okay. So now... Perfect. Okay, check this out, right? So now as we're moving through and looking at price, okay, this low volume area, liquid. This high volume node right here, not liquid, in the middle of the zone. This low volume node, very liquid, right? Resistance. This high volume node, liquid, support. This example. Yeah, this is super cool. I love it. I'll make this for you guys. So we would just draw it like this, right? Support. Because it's liquid. This, illiquid. So you'd have support. Illiquid moving through here, it would move at like double the pace. That low volume node, which should be resistance. Ah. Yeah. You guys understand where I'm going with this? Pretty cool, right? So if it passes through, so as you can tell, a tail, 384 is a breakout point in that same analysis. I don't even know if this is missing data or whatever, but you can see where I'm going with this, right? This is squeeze. So I wouldn't be now. Don't again. This is not talking about really SPY because I don't know what data is missing. But according to this, right? If you get to here, there is no illiquidity. There's only bears, and market will rapidly find where buyers will be as fast as possible. Do we all understand that? That's a lesson for the day. It's pretty cool, right? So to answer your question, the limitations of where volume profile doesn't work is that where you think is resistance, there is no resistance. It's all bears already in their positions. Not like new bears are going to step back up right there. They just can't imply that, right? So anytime price is going up, dealers are going to look for buyers, or I mean, look for sellers, right? Anytime price is lowering, they're looking for buyers. So they've already got sellers in here. So why are they looking for more sellers? It's not going to be from bears. It's going to be from bulls closing out their longs. So if they make their way back to this liquidity pocket, again, market's balanced where longs might be the sellers, right? It's the opposite sometimes during a squeeze. You're raising price looking for sellers. Normally it could be bears, but a lot of times you're just going to find a place where bulls can take profit too. Either case, when you're going through a bear zone, even though there was high volume here, it's illiquid because it's a one-sided zone. Anytime you're in one of the zones, it's illiquid. You're on one, it's an imbalance. Does that make sense? High volume, but whatever bulls were there are no longer bulls down in here. They're bulls like here, here, and there. So no bulls. So there's nobody long to be the seller. If they have to raise price through here, these are the only people still long to be the seller, right? That's it. That's how you do this kind of analysis. So high volume node is gonna have zero activity when we get there. It's gonna walk through it like it's not even there. So like if we have a day where we fill this gap, it's just gonna keep going the next day to that low volume area of resistance. Make sense? So, and also it matters how far back you look on the chart because people can be holding positions for months at a time. You don't know, but you will know because of where the distribution is of the options. So, you know, I don't know if the people that bought here bought 10 years ago. You never know, or 2 years ago, sorry. And they're no longer long there. Maybe if they finally close out their long today. But when you get here, because it's in the middle of a zone, it's just going to walk right through it. And that's why people always ask when you have your breakout targets on like a short squeeze, why do I always look for the edge of the bear zone as my profit target? I don't bet that we break bullish because the market is going to have, you know, sellers right here, which are upside down bulls just breaking even, right? Or at least balancing. So any breakout on hedge pressure, I always look for the edge of the bear zone as resistance. And liquidity map for that same reason does show that, right? So like any squeeze breakout, I always look for that resistance right there, right? The edge of the bull zone, bear zone is resistance. Same thing here. The edge of the bull zone is resistance for that particular reason, because you're liquid. I mean, your literally liquidity is right next door. So on the SPY, if we continue to break out through here, my profit target is 400, right? So all my options aren't going to be looking for like 416, 420. I'm going to be looking to get in the money at the best case scenario right up here. And that's hopefully a great lesson on volume profile. And again, the short end of that version, I'm talking about that. You repeat. One thing in here. Okay, so just a quick little recap of something neat. We're talking about how to use volume profile with liquidity map. So you guys have used volume profile before. You will know that on any particular chart, you can show where activity has taken place due to trading. High volume means high activity. Doesn't necessarily mean people are still in or out of a position. So, you know, as a trader, you're going to be looking to find support and resistance where there was previous high volume activity. So I've got a volume profile. I'm just going to just quickly share this with you on the chart. And as far back as I can show, let's do like a 15-minute chart. Is that I can show where volume was based on, and this is the S&P. And you can see off to the right, there's just a volume profile. Ignore the colors. But you can see that inside of here, let me see if I can't put the SPY walls on here also. Auto, single date, single date. All them. Did like auto manual one. Yeah. Perfect. Just repeating from earlier. Okay. So I can see that, you know, as it's going to show me where volume has been trading. Sorry, where trading has had volume. You know, traditionally, as we always talk about, we do volume profile analysis. It's not terrible Again, to repeat, what is missing from this is that does volume mean support or resistance? And sometimes it's yes, sometimes it's no. And the pit, low volume node can be support or resistance as well. So let's kind of like draw this maybe, right? There's a low volume node, a high volume node, high, and low. Okay. Let's draw this. Let's do like, let's just try to get some walls drawn here. Let's see if we can't. Oh wait, oops, sorry. 1.1. Without resetting. Okay, perfect. Now what you see right here, and I'm not going to touch anything on the chart, I'm just going to draw. And I wonder why it keeps resetting. I kind of want that to freeze on the chart. Let me just draw, let me stretch it right here. Don't go anywhere, walls. Stay there. Okay, so what we try to look for in any kind of volume profile analysis is support or resistances. And so if you put it next to your liquidity map, and you can actually change your mode to single date, and we're gonna look at the monthly expiration. You know, we're looking at kind of like a month scale here. So we want to kind of fan out to see where of these 6 potential targets, all these H's and L's, are going to be support or resistance going forward. And so in high volume node, traditionally you would think, oh, there's high volume, there's high support or high resistance. And that is actually the myth of how volume profile works and not necessarily going to imply support or resistance. I'm going to show you how you do it with liquidity map. So where bear zone and bull zones are active traders still in a position. When did they long? You don't know, but they're still long. That's the important part. So bull zone is going to be where a bull bought or wanted to buy, and an example that somebody bought the SPY and there were bulls there. Then you have a market maker, right over here, who was short against you with an abundance of calls to balance. That's why when we find the call walls or call zones, we know a dealer is short to a bull. So the market is one-sided to the bulls here. It's not liquid. So let's put like an X if it's not liquid. And let's put a green X where it is. So similar here, right? You had bears down here. And again, not liquid. All bears, no bulls. All bulls, no bears. But in the middle, check. Market nice and liquid. Okay, bulls and bears are right next to each other. So that's good. And so when you're going to look for high volume and low volume nodes, you need to find areas where bulls and bears are near each other, or a liquidity pocket, which is like this. And when your liquidity pocket matches with your low volume node, see in this particular case, if price is raising, you're going to find sellers and buyers in close proximity here. Your buyers could be shorts covering, your sellers could be longs taking profit, or just previous activity being proven here as the bulls are still holding on, the bears are still holding on. So in this particular case, the low volume node is going to be a very high resistance when you get there, because you have bulls and bears in close proximity. Liquidity is like glue for price. One thing to note is that the high volume node here and here, which is exactly here and there, has no buyers, right? It's no non-dealer buyers. It's all bears. So if price were for some reason to just push through this level and keep going higher, just because there's high volume here doesn't mean you're going to get resistance there, because the only people actively in trades here, more so on the imbalance side of the market, are bears than bulls, and bears are actively short the market. So when price is raising, say like on a short squeeze, like for instance a gamma positive squeeze up, dealers are looking for sellers and buyers. Again, when you raise price, you're usually looking for sellers. When you lower price, you're looking for buyers. So they're looking for sellers. They know they have sellers all through here, but they know they have, so eventually bears are going to be people that already sold. So maybe a crapshoot if already short, if they're going to short some more, right? I mean, if somebody shorted right here and you go back to it, are they going to manifest more money to short again? Maybe not. But if you were to push all the way up the bull territory, you have people that are long that could sell, right? There are people that are already long, they could sell if they break even. So in reality, it's like if you're raising price to look for sellers, the best place to find them is where people already sold and close to where people could sell further. Maximum amount of sellers is going to be right here where it's liquid. So the idea is that when you are moving through a zone from the bottom, just because there's high volume doesn't mean there's any resistance there or there. Actually, let me X that one out. Make sense? Well, the highest volume nodes on the chart, the market's going to walk right through it more likely than it won't. Now, you could find new people wanting to short again there just because, but there's no evidence of maximum amount of sell potential by, you know, liquidity. So the higher the liquidity when you're between a call and a bear and bull zone, then whatever node you have high or low is going to likely be where your resistances are. So this one, no dice. Like I wouldn't be shorting against 385 based on this evidence because high volume, but whatever high volume you had was likely dissipated because there's no proof of buyers here. So if the market's raising through here, nobody's bought, nobody's long, then there's nobody long to sell. They're going to keep going until they find people that are long to sell. And that's exactly how liquidity works. Now down here, high volume node and tons of liquidity pockets. Anytime you flip from bear to bull zone, super liquid. And that's why this particular area, put a box around it, is also support. So this kind of low volume node area, again, illiquid. High volume node, right on the edge of a bear zone. Yeah, so this could be resistance as well. So when I would draw them together, and it's kind of a jumbled colored mess, there is resistance to that low volume, resistance to that high volume. No support there, no support there, and support there. So let's draw it. And it looks kind of a little goofy here. Let's draw it kind of like over here to the left. You have kind of support at this 365 area. So that's a horrible drawing. Actually, you can draw straight lines. So let's do this. I like support right here. Actually, kind of nice. Okay, boom. Actually. And you can see, we didn't mean to do that. Boom. Actually draw this a little better. You can see right here, there is support where that high volume is, and there's how your volume node is kind of working for you. And then of course, where we drew right there. Ooh. There's resistance there. So as a trader, it's not all volume nodes have meaning. We look at liquidity map on top of them to give the ones that do have meaning. So I'm going to simplify this chart down super simple. Is that this is it. So any questions about that? So in your analysis, especially on longer term charts, you just want to do, and I'm looking at the 21st. So the trick is I'm looking on the monthly scale. So I'm looking a month out. Right there and right there. Whatever that is. You know, I can't draw a straight line, save my life, but you know what I'm saying. Right here. So in this particular setup, you can see that the market has resistance where there's no volume, which just so happens to retrace that move. And if you remember our red line class, there's your red line off of that. Pretty neat, right? And then of course here, there's that support, and you can see that that volume is finding its way in that support range as it is, right? So pretty cool how that works. If you want to understand volume profile to a little more degree, there's a lot of stuff on the web about it, but this is showing you which nodes have the most meaning. So I would look for low and high volume nodes that match with liquidity. That's the topic. So there's a little trick for you. Rock Scooter style. Yeah, so check it out. All right, let's get back to the 1 minute chart. I love breaking out into spontaneous lessons. Draw some horizontal lines from the drawing tool. Yeah, I should probably do that. That'd probably be even cleaner. Ooh, spy on a BLD liquidity. Okay, let's do this again, right? Let's do the same thing. We have, let's mark up our chart. This is liquidity pocket right here. and low volume node. Great. Resistance. So now I can do 360 to 365, 5 to 1. R to R. High volume node right here. No resistance. It'll walk right through it like nothing's happening. Let's see it. Let's watch it in action. Zooming in right here, if you see SPY 1 minute chart, this is just showing the last, I don't know, maybe like a week of data. And you can see that we are currently in a monthly hedge pressure break, a squeeze on a bear long down on SPY. So bring up our liquidity map right here. Bear long down, as you see, has that downward potential. It wants to find sellers. Price is raising to find sellers in bear territory, which means the market is looking for either sellers from hedging, which is below or rejecting these hedge pressures, or sellers, which would be in this bull zone, people that are actively long, to likely sell when they break even from this liquidity pocket. So normally when you go to liquidity pocket, you'll find some sellers. So if I look on the last 5 or 6 days, again, the high volume node is smack here in the middle where there is no necessary or necessarily indicated bulls anywhere. So inside of here, there are no bulls, even though there's a high volume, which likely came from this close on that day. So this high volume is definitely skewed by the closing print right here. And whoever is in whatever closing print you have, it looks like they were bears because people were short the market and dealers had to long and buy the puts with it. So it's only bears inside of here. So this high volume were previous bears that entered trades and are still long. Still short today because the dealers still have the puts against them. So you're walking through previous bears, this high volume, you may say, ooh, there's going to be resistance there. And there may be, but not likely to find resistance until there. So you'll see that while there's a high volume here, there's not a lot of trading activity that took place there. It's typically this massive ramp up right here of that closing print that literally shows you how, 1 minute, 2 minutes of trading can completely skew your whole profile. And it's clear that these are bears. So another way to use Rocket Scooter's liquidity map is to understand who's there, right? When you get here, who are you trading against? These are bears. A bear is somebody that's in an active short position. So you can actually trace this back. I usually like to find where that high volume was and look at that. Bears at the close. So there was probably a sell imbalance, right, on this day. So when we get right to here, you're just going to be going against some firms that shorted and that they're still short today. But you don't have any evidence of any buyers, right, until you get up here. So the buyers exist right there. The dealers are finding liquidity where buyers and sellers are in harmony. Well, you're going to raise price to look for sellers. The only evidence of it's not people that already sold. You're going to get there and say, well, are they going to short some more when they get there? Probably not. They probably put their money in the bet already. But as you raise price, sellers are going to become buyers, and that becomes a problem. So you get that long hedging and shorts likely covering. It's a lot of buyers and no sellers. So they need to find that next area where sellers can be, which could be previous buyers. And when you get to that level, then there's a probability they can sell for profit. So liquidity pocket is always the search. And as a matter of fact, as we're sitting here with this lesson today, this is really great because you're going to actually probably likely see it. Maybe I'll keep recording so I can clip it. But right here, if we pass through that, it's just going to walk through like it's nothing with a high probability. Just watch. Y'all want to see it? We tend to do this a lot, which is coincidentally we're teaching a lesson and the best example of the lesson just appears. I think like the universe is like really looking out for my videos. It knows I don't have any time to make them. So like I don't have to fish for another example. So again, right here, let's see what happens when we get about right there. The universe likes us today for some reason. Let's draw like a line here. And let's kind of see what's up, Joel and Matthew. Let's see if we get there. Let's see what kind of activity that we have, right? Let's go ahead and just zoom out a little bit. I know it's going to disappear. because I zoomed out, but I do want to see what's going on down there. Let's just remember that for the sake of the video, on that time frame I was looking for, this was a high volume node over time. So if my theory is correct, not theory, but like if my demonstration is correct, when we get to this line, there could be a bounce because there's volume, but you will see when you get there is that question is if there's a lot of volume that just comes out of nowhere, it could be those people that were short on that day we dropped down covering. So if you see, you get here and there's high volume and it's not resisting, it's just going to walk to the liquidity pocket with no resistance. So we'll almost call it like the free fall zone. Draw like a box. Shapes. So between like here, here. This is nice. I love being able to draw this text here. Right. No resistance. Even though high volume. So meaning that if you pass through those shorts on that imbalance and you go here, like what you'll likely see is once you get there, a volume spike if I'm right, but it won't resist. That's my bet. So look like this, my call from this morning, positive resilience already. Nice. Look at this. Once resilience went positive from here, we knew we were going to fill the gap on SPY, which is right there. Pretty neat, right? There's your resilience call from this morning. That was our call. Nice to see that. Let's just let this play out. I'll make a video of this one too. This will be super cool. Hold it. Nice job. This was a resilience play. I love when resilience starts calling the shots. Anytime you're below half gap, res goes positive, you look to fill the gap, right? That is that's the arbitrage trade that we get in resilience, which is amazing. I love it. Make sure you guys go to rocketscooter.com really quick. Check out that link in the description. I want you guys to all pick up the platform. If you've never seen it before, never played with it, these calculations are super cool and y'all are gonna love them. And yeah, market's very liquid still in general. People are asking. So no resistance even though high volume, right? So let's see what happens. Again, filling that gap, you're always going to have resistance at the gap fill, but it's nice to see that SPY is moving on that. Okay, end of the stream, 11 o'clock. We usually stop here. You have any questions for me, guys? I do want to catch this though as part of the recording, so I guess I might as well leave this live until it gets there, but yeah, I'm probably gonna stop the broadcast though. So I'm gonna make a recap video today, put everything in there. Love you guys. Make sure you tune in. Go to that Discord. Yo, Joel, let's talk. Let's talk today. I gotta talk to you. Send me a message. How y'all doing, man? Here. Everybody, this Discord really quick. Check it out. Free Discord. Go in there. Tons and tons of people in there. Tons of traders. Rockstar has over 700 subscribed or lifetime members. We have 3,400 people in the Discord. We are bigger than your favorite Discord. Promise you that. Go to rockscooter.com. Go check out the free trial and play at the platform yourself for a week on the house for free and hang out. We love you guys. We love having you here. I will make a video with this whole resistance volume profile stuff in just a little bit. Once it gets there, I'll be recording to catch that footage all day. Until then, love you guys. Stay tuned and have a good day. I'm out. Peace.